Good evening, guys. Welcome to Trading for Living. Um, in this event, we'll be talking about the basics of crypto trading. This event is brought to you by the Binance Academy, and I hope you hang around to learn how to trade the crypto market for yourself. Okay, it is going to be insightful. You're going to learn a whole lot. Okay, I'm not going to hold back. I'm going to teach you everything I know and understand. Okay, so let me introduce myself, right? My name is Olan Katindero, and yeah, I'm a crypto trader and a financial educator. I love talking about finance, investing, and anything that actually relates to money management and the rest like that, and wealth creation on my WhatsApp status for now. Okay, and my passion in itself is just to make African youth understand how big the financial market is and the opportunity that actually lies in it and how they can take advantage of it. Okay, I'm an engineering student and I have interest in technology and the rest like that, and that has driven my love for cryptocurrencies because it has a very large use case in the technology industry. It is going to aid artificial intelligence in the nearest future, so it is something you have to be excited about, right? And at the end of this whole training, I believe you should understand how to use the Binance ecosystem, how you can analyze cryptocurrencies, and how you can trade them for yourself, right? Okay, and please don't forget that this event is brought to you by Binance. You can check them out on Twitter and Facebook and just like that, and follow them. And you can download their app and start trading immediately. Okay, Binance is the number one leading cryptocurrency exchange. Okay, and let me explain what an exchange means. An exchange is simply a marketplace where buyers and sellers come together to sell either their merchandise or goods or services. Okay, and now when it comes to the cryptocurrency industry, basically what we trade among ourselves is cryptocurrencies. Okay, so an exchange is like a marketplace where cryptocurrencies are being sold and bought. Okay, and Binance is the number one. They have the best security for your funds. Your funds are safe with them. Um, they offer wide range of cryptocurrencies to actually trade. Okay, and they offer futures, type of trading, margin, and some other stuff like that. Okay, you get to understand them as we go on. Now let's go into the deal for today. What is trading itself? Okay, trading is simply exchanging something of value for something else that is actually of value too. Okay, so now in exchange for the word value, you can say asset. Okay, so trading is just simply buying and selling of asset. That is, you just exchange asset. Now, just like the way I talked about an exchange, which is a marketplace, that same way I'll use it in this context, right? If you go to a marketplace, what do? You actually take your money, which is like your paper cash, to the marketplace, and when you get there, you exchange it for what? Maybe rice and beans and whatever. You understand? That's trading. Okay, that's trading. Or let's say you took rice to the marketplace and you exchange your rice for cash. You understand? Or let's go back to the olden days when there was something called trade by barter instead of the normal cash that we had. Okay, where you can exchange your rice for your yam. Now, an example, a an example that actually fits our world now is, now let's say you have a gaming PC, a gaming laptop, right? And you want to have a feel of what PS4 feels like or PS5 feels like, you can exchange your laptop, which is a gaming laptop, for that PS4. Okay, the person that has PS4 can give you so you can have a feel of actually playing games on a gaming PC. You understand? So these are examples of trading, right? Now, when it comes to something called financial market is simply a market where basically we trade things that are money like in nature. Okay, um, money in the sense that when you check the underlying value, it is mostly just selling money and buying money. Okay, and we have financial assets like stocks, bonds, currencies, options, cryptocurrencies, ETFs, and others like that. Okay, you don't really need to understand all these things that much for now. And if you know you want to have more in-depth knowledge in that, you can just open your Google app and search away. Okay, and now we're going to make this thing a two-way thing, right? I'm going to first explain using what you can see in this slide to you. Then we'll go over to the Binance website where I'll be showing you real life how it's done, how you can understand this. Now, the first thing I want you to notice is this thing here called chat. Okay. Now, I want to take you back to secondary school when you were taught um, the normal graph or math itself, where we learn how to draw, maybe where we do experiment and we map out. Uh, Let me which one should I talk about now? Okay, what's force? What's the formula for force? I forgot. Okay, let's use pressure. Pressure is force over area, right? Force over area. So where you are plotting maybe uh, force on the vertical axis and area on the horizontal axis, then you start noting out points and stuff like that. So you know, um, you point it out, at the end of the day, you rule a straight line on it. Okay, that's basically what chart is. It's just a result of what has happened in the past. Now, instead of um, force over area, now here we have time on the horizontal, while we have price on the vertical. Okay, so all these things you're seeing in this middle, they're just representation. Those, you know, those things that we should shade on our graph. This is exactly what it is. So just like you shading all these things like that. So as at, let's say, as at 2 o'clock today, the price of Bitcoin was maybe $10,000. You shade it out like that. You understand? But now we are not doing it manually. It is done for us electronically. Okay, so we don't actually see the process behind it. You understand? So, but we can actually use this information, this thing that has been ticked out on this place, to predict what is going to happen in the future. Okay, we can use it to predict what is going to happen in the future, and that will tell us, okay, should we buy Bitcoin now or should we not buy Bitcoin now? You understand? So that's basically what a chart is used for. Now, this place here, you can see they call them market pairs. Okay, um the concept of a market pair is very, very simple. Now, when it's just about what you're exchanging for what you want to get. Okay, what you're willing to give up for what you want to get. Okay, now when you go to a market and you want to buy onions, okay, what do? You give them your naira. Okay, and in turn they give you what? They give you onions. You understand? At that moment, onions and naira, they are a market pair because you are exchanging them. They can be exchanged. You understand? You're interested in onions in exchange for naira at that moment, and it is a market pair. Okay, same thing comes into cryptocurrencies. Okay, let's say I have Bitcoin, I can want to exchange my Bitcoin for Ethereum. At that moment, Ethereum and Bitcoin, they are called market pairs. I hope you understand that. Now, the last one here is order box. Okay, order box is where you now actually um put in the deal, right? This is where you put in the deal and say, okay, yes, I'm ready to buy, I'm ready to sell. Okay, when you're ready to exchange now in the market now, first of all, you have to price the onions. Okay, what's the price? 100 naira, 50 naira, and the rest like that. If you're okay with the price, that's when you now say, okay, I'll okay, take this cash. Yeah, give me onions. You understand? So, the moment, the place where you actually do that uh, on Binance, which is our market, is this order box. Okay, so let's go to a real life scenario, right? So you come to trade when you're on Binance, you come to trade. Okay, you come to advance. If you are using a mobile phone, just check below and go to trade. It's that simple, right? and go to trade. Okay, so you can see the chart is loading right here. Okay, the chart is loading here, and this is the other box here. You can buy and you can sell, right? You can buy and you can sell. Now for markets, you won't easily see it because the what's it called has changed. The layout changes over time. Okay, the layout for Binance changes over time. As they upgrade, they make it more user friendly and stuff like that. Okay, so for you to find market, please just click on this BTC here. You see this drop down, you can click on it, you can see it here, right? You have BNB slash NGN. What does it mean? Now, when you see BNB slash NGN, it means you are actually you want to buy BNB, but you are willing to give out naira for it to buy it. Okay, and that's just a simple example. So let's continue with this slide. Now, just like I said before, a market is a place where you actually buy and sell. You understand? And a market pair um, is just the combination of the two things you are interested in, what you are willing to give out and what you're willing to get in. You understand? So when you now see in Binance, when you see something like this BTC slash NGN, what does it mean? It means you are willing to exchange your naira to get BTC. Okay, when you see BTC slash ZAR, it means you are willing to exchange your South African rand for BTC. When you see BTC slash KES, it means you are willing to exchange your Kenyan shilling for BTC. Same thing with dollar for BTC. You understand? So if you see ETH NGN, you are willing to do what? Exchange your ETH for NGN. You understand? So that means if you are buying, when you want to buy NGN, you pay with Naira. And when you want to sell ETH, which is Ethereum, you get paid in Naira. You understand? At that moment, you are dealing with only Naira and Ethereum. Do you understand? So let me go back to this place again. You see? Now, when you come to this marketplace, you see BNB. In this place, what it means is that you are using BNB to buy Avi. That means you have BNB. Let's say you bought BNB some months back. You're using it to exchange for Avi. Okay? You're using it to exchange for Avi. So, and if you want to sell your Avi through this market pay, you will receive BNB in return. You understand? You receive BNB in return. If you choose the BTC ones, okay, you are buying with BTC, and if you want to sell Aave, you get BTC in return. If you choose alts are basically altcoins. They are like um other coins that are not Bitcoin, other cryptocurrencies that are not Bitcoin. Okay, so you see Ethereum, Tron, and Ripple. They are the bigger ones. Okay, so let's say you have Ethereum and you want to buy Aave, you can do that. Okay, and if you sell Aave using this pair, you get Ethereum in return. And we have fiat is just the normal currencies that dollar, naira, um Ghana cedis, Kenyan shillings, South African rand, and just like that. You understand? So Great Britain pound, and so they are called fiat. Okay, if I have dollars now, USDT means USD data, that is US dollars data. It is a representation of United States dollars on the blockchain on in cryptocurrency industry. Okay, is what we use to represent USD. You understand? So if you have USD, you can use it to do what? To buy Aave. You understand? And if you have Aave with this pair, you can sell it for what? For BTC. Okay, so let's just go here. As you can see here, right? So sorry. So if I'm selling, you see, it's telling me what's my balance. That means I have to have some Aave to get what? To get USDT. Okay. So now other types. Now cryptocurrency market offers us something really really um useful, that is other types. Now when you want to buy or sell a cryptocurrencies, you can choose how you want to buy or sell it. Okay, you can choose to do um the business immediately, or you can just choose to put up an order for a later period. Okay, Now, the first one I'll talk about is a limit order, right? What does a limit order mean? A limit order means, let me go back to a normal market setting. Okay, let's say you got a gist that okay, tomatoes is going to be expensive next week, and you don't have tomatoes right now. Okay, or no, or let me put it like this: you got a gist that tomatoes is going to be cheap next week, right? And you don't have tomatoes right now, but you're interested in buying it when it becomes cheap. What do? You can tell on, let's say you're not traveling and you won't be available. You can tell your friend that will be in the market that, bro, when they bring tomatoes next week and it is cheap, okay, just buy for me. Okay, let's say the current price of tomatoes is 10,000 naira per basket. Okay, and you got to use that to be 5,000 naira per basket. You can tell the person that, guy, if this price falls to 5,000, I beg, no waste time, let me buy. But if it does not fall to 5,000, I'm not interested. You can say that, okay? And your friend will only buy for you once the price falls to 5,000. You understand? And that's basically what limit orders does. You just tell the market, you just tell Binance that, Binance, so once the price of a cryptocurrency falls to this level, please buy for me. Okay? Let's say you're waiting for Bitcoin price to fall to maybe 6,000, although you're a witcher, but you just want that. Okay? You can tell Binance that, Binance, once the price of Bitcoin falls to $5,000, please buy for me. You understand? So once you tell Binance that using a limit order, Binance will actually keep that order separately. And in case Bitcoin price ever falls to 5,000, they immediately buy for you and keep it for you. You understand? And let's now use the opposite scenario. Let's say you already bought Bitcoin, okay, and you won't be available, you won't be online, and you want to sell it when the price of Bitcoin gets to $20,000 automatically, whether you're there or not. What do? You you set a limit order. Okay, you tell Binance, Binance, once price gets to this level, please sell my Bitcoin and give me my dollars. You understand? So let's quickly do a real life example. Okay, so this is Avi here, right? Uh, you can go to buy. Okay, so I want to buy Avi when the price falls to $40. Okay, my spirit is telling me to fall to $40. So I'll come to this price, I'll put 40, right? You can see right here, I'm in limit, right? When price falls to this, how many Avi do I want to buy? Okay, I want to buy one Avi. One Avi is $50 right now. Okay, but at that time, by the time it falls to 50 to 40, that means I'll be spending $40 to buy one Avi. Okay, you see, total value one Avi. So if I click on buy, automatically you can see here limit. Yeah. So what does it mean? When RV price ever falls to this level, they will automatically buy RV for me. Okay. And you see it in my open orders below my chart. Okay, you can see it here. Limit buy. This is the price I want to buy. This is the amount of RV I want to buy. You understand? Few, that means it has not been bought at all. They are waiting for price to fall before they buy it for me. You understand? By the time I buy this thing, you see 100% filled, right? So the next one is market order. The market order is one we are usually used to when you go to the market and immediately you exchange your cash for whatever it is you want to buy. No matter what the price is saying, you understand. If they say they are selling tomatoes at 10,000 naira right now, you just want to buy it, you don't care. You just give them the money, they give you the tomatoes in return. You understand? That's market order. Okay? And how can you do that? When you come to this place here, I'm interested in buying this Avi right now. If it is telling me buy Avi, I'll just click on market. Okay, I can see I want to buy maybe with like 25% of what is in my account, and I can click on buy. Right, you can see other market order created, market order field. Right, so instead of seeing it in open order, I'll see it in order history. Okay, that means I bought what was it called now? I bought Avi USDT. See, I bought it at what, 51. Okay, I bought it at 51. Do you understand? You can see it here. That's 51. It's $1.49. I can see the price is dropping. The price is dropping. So I can go back again can go back again and sell all my AVE because it's dropping. I'll just click on this 200% and sell. Okay, and immediately it will sell my AVE and return my money back to um, my dollar. You can see it here, sell, right? So okay, so it's that simple. It's that simple. Okay, so yeah, that's how to do market order. Okay, so a stop loss order now. A stop loss order is useful in the case when the market does not do what you want. Okay, so let's say you bought Bitcoin at 15,000. Okay, you're expecting it to get to 20,000 for it to make some handsome profit, but something else happened and Bitcoin started falling. Okay, how can you protect yourself from reducing so that you don't lose all your money? You understand? So that your money does not become worthless. That's where stop loss order comes in, right? So you can tell Binance that, okay, Binance, this Bitcoin that I have, if price can fall to 14,000, please sell it in loss for me and just give me my money. You understand? Or if price falls to $10,000, please sell it for me. You understand? That's what a stop loss order means. Okay, so let me show you how that's done. Okay, let me show you how that's done. So here you can see the stop limit here, right? This is where you fill in your details. Let's say I still have some AVE. This is where you easily see it. Okay, and I'll be able to set my I can set it to maybe 50. I don't have any AVE right now. Or okay, let's do like this. Let's quickly buy some AVE. Let's buy with market order. Let's buy some. Okay, so now I'm telling market that if this price falls, or if it falls to if it falls to $50, if it falls to $50, please, I'm not doing it again. I beg, sell my thing for me. Okay, if it falls to $50, please sell all the AVE, sell everything, sell it all, sell it for me. And so you can see it here, right? So it's there. It's there. So once price ever falls to 50, it will automatically sell my AVE and give me my dollars. Do you understand? So that's how stop loss order works. It protects you on the days of trouble, okay, when the market is falling. So let's come to actually analyzing a coin or a cryptocurrency. How do you know whether it's going to go up or it is going to go down? Okay, there are two ways. There are fundamental analysis and we have technical analysis. Fundamentals is when you're looking at something that actually made up the cryptocurrencies, maybe like the company behind it, um, the technology behind it, the number of people that are actually interested in it, how much it's trading, understand, and stuff like that. Okay, but we have another one which is called technical analysis. Technical analysis is just based on using what has happened before to predict what is going to happen in the future. You know, when I talked about charts the last time, I said just like you plot all these stuff on the graph already and you're using it as a guide for the future. Okay, and that's what technical analysis is. So in this training, we'll only be talking about technical analysis. Okay, so just sit tight and let's get it. So now in technical analysis, there are different tools to use. Okay, we have candlesticks charts, we have trend line support and resistance, we have some other indicators like that. So I'm going to touch each and every one of them and how to use them. Okay, so candlestick chart. Okay, candlestick is just like, when I said um when we do our normal physics, where you say, okay, when you draw your table and you start shading your graph, that's just like what candlestick is. Okay, just like this shading on the graph for you to know what is going to happen. Okay, but now a candlestick has more it has more information than just being there. Okay, it consists of four data points. One, we have an open, we have an high, we have a low, and we have a close. Okay, so um now you can see all these things here, right? Each one of them is called a candlestick. Each one of them is called a candlestick. Okay, and we have two type of candlestick. We have a bullish candlestick and we have a bearish candlestick. Bullish are the ones that are going up. They are usually colored in green, and red are the ones going down. Okay, they are the ones going down. They are called bearish candles. Okay, bull means that when a bull, when you are attacked by a bull, if you maybe if you watch all this cowboy and ranch stuff, if a bull attacks someone, it carries the person from below and throws them, right? And if a bear attacks you, it pounds on you, jumps on you, you understand? Jumps on you and keeps you on the floor while a bull throws you up. So that's why they say when the market is going up, it is a bull, and when it is going down, it is a bear. Okay, so a bullish market goes up, a bullish candle goes up, while a bearish candle goes down. Okay, so now look at this candle here. Okay, you can see it has a part that is colored and it has a part that is actually just thin. Okay, it has a part that is thin. The thin part is called wick, wick. Okay, just like when you have a normal candle that it has, that wick where you put fire and light it. So this is like the wick, while this is the body. Okay, the body consists of the distance between the open and the close of that candle. Now, okay, let me explain this first. A candle uh, forms within a time range. Let's go to a chart where I can explain this better. Sorry, yeah, let me use this. So if you can see this thing here, you can see this thing here is called 1H. Or let me use the Binance one. Let me use the Binance chart. You can see here we have 1D. 1D means 1 day. 1W means 1 week. One M means what? 1 month. Okay, 1 month. 1 hour, 1H means 1 hour, 2H means 2 hour, 4H means 4 hour, 6H 6 hours, 8H 8 hours, 12H 12 hours. While we also have minutes, 1 minute, 3 minutes, 5 minutes. Now, whichever one I put this thing on, if I put this thing on 4 hour, what it means is that every candle that you are seeing here, these candles here, one of them forms every 4 hours. Okay, one of them falls every, sorry. Okay, you can cancel these steps in the chat. Okay, one of them forms every 4 hour. Okay, so at the end of the 4 hour, this one will become a closed candle like this one's. Okay, so now for each candle that you see here, what does it mean? If you notice these values here, they change as I touch different candles. Now when I'm on this candle, you can see the O is reading at 45.615. That means in the beginning of 1 4 hour, the price of AVI was $45.61. At the end of that 4 hour, the close, which is C, it was $48. Okay, and within that period, it went as high as 48.6 and went as low as 44. Okay, so that's just how a candlestick is. You understand? Now, trend lines. Okay, uh, after in our physics class, after we've drawn those points together, after we've put those points, after we shade them, shade them, shade them, shade them, shade them, our teacher used to say, pick 3 lines that join together very well and draw them. You understand? That's almost like what happens in a trend line. Okay, so let me show you some. Let me use a more useful chart. Now, if you look at this place here, it's just this is like the lowest place the market got before going up, right? Same thing here. When this market started, after it went up a bit, it started coming down a little bit, right? It stopped here, started going up again. Same thing here, started going up again. Okay, so now when you join these three places together, just like the same way we used to draw those dots, then say line of the best fit or something. Okay, so let me draw like this. When you draw them together, okay, you have a line, and this line is called a trend line. Okay, what's the usefulness of a trend line? A trend line is useful in the sense that when I draw this line up, I'm expecting that whenever Bitcoin price moves up, whenever Bitcoin price goes up, you should always come and touch this line before continuing up. Touch this line before continuing up. Okay, so if I miss the opportunity of buying Bitcoin at this place, I'm not going to buy here because I don't know if it will keep going up. Okay, I'm going to wait for it to go up. Probably when it now comes down to this place, when it touches this line, I'm more confident that okay, it will bounce off this line and go up. So I'll buy Bitcoin from here. Okay, unlike some people that maybe after Bitcoin started going up, they'll be like they'll start buying Bitcoin here. They buy Bitcoin around this range. I won't do that. I'll wait for Bitcoin to come back to this place before I do what before I take a buy. Okay, if I happen to or maybe I opened my chart late and I didn't see it on time and Bitcoin was already here. Unlike every Tom and Harry that will buy here because they don't want to miss out, I'll wait for it to come back and touch this line before buying. Okay, and that's what a trend line is. Now let's explain support and resistance. Okay, a resistance is a location or a level where price gets to and price goes down. When price is already going up, once it gets to that region, it goes down. Okay, while a support is a region when price gets to, price goes up. If price has been falling, once price gets to that region, it goes up. Okay, so we say resistance is just like a ceiling. You know, when you throw a ball to a ceiling, what does it do? It will bounce down. You understand? While a support is like a ground floor. When you throw a ball, a bouncing ball on the floor, what does it do? It bounces up. You understand? So that's just how it is. Okay, now let's quickly show you some real example very fast. So let me use this. Now if you look at this place here, right, this zone here, sorry, when this market was going up, okay, it topped out here, right, went down, topped out here, went down, topped out here. Okay, but I can draw this as far as this region here. And after market got to this place, what happened next? This market drops down, went down. Okay, so naturally, the instinct of investors is because price went down at this level. When price gets to this place again, we're expecting it to fall. And what has started happening? You can see this little movement down here, right? So we should be expecting maybe the market can still go down. You understand? Same thing with a support level. Let me look for a support level, right? So this market was going down from here, it started moving back up. what happened when this thing came back to this place, went up. You understand? So that's basically what support and resistance does. Okay, when the market um moves in a different direction at a point, just mark out that point and wait for market to return back to it so you can take action at that point. Okay, now there's some indicators that we actually use to denote what is going to happen in the market. So this one I want to go to, let me go back to that this place here. Now for you to add an RSI, okay, just click on this place here and you can find RSI. Just type it, RSI, relative strength index. Okay, what it does is it tells you the direction of the market, where the market is going to. Okay, so an RSI is scaled from, sorry, I want us to be able to see this thing very clearly. Okay, okay. So I hope you can see this very clearly now. So you can see the RSI. It is scaled from 0 to 100. Okay, majorly 0 to 100. That's what we use. Okay, on this chart. Now, apart from the normal scaling, this line that you're seeing here, this line here, is on 30. They draw it on 30. Okay, and this one above is on 70. Okay, the 31 is called oversold region. So once you see this line in the middle falls to this oversold region, what does it tell you to do? It's trying to tell you to start buying, right? It tells you to buy. Now you can see here, after this market got here, what happened? This market started going up. Okay, this market started going up. I hope you can get that. Okay, started going up. Okay, and once price gets to this 70, you have to start preparing to start selling. Okay, you start preparing to sell. Start preparing to sell. So let's say you were able to catch it here, you were able to buy AV at this region, which was around $28, and it has now gotten to this place. You can see this is almost 100% gain, almost 100% gain. This to this region. Even if it's not, this is about 88% gain. You can see just from when the market got towards to oversold. You understand? To where it got to what? To overbought. You'll have made crazy amounts of money from this by just using this indicator here. You see, very, very simple. When the price gets to this 30 region, start looking for opportunity to buy. When it gets to this place, start looking for opportunity to do what? To sell. So that's just a simple way of using RSI. Okay, moving averages. Okay, moving averages. So basically, moving averages, they are just um it's just a simple mathematical formula rather, that is used to predict the direction of the market. Okay, so the idea is that when you have two um moving average cross each other and these candles go above them, you should buy, right? I'm going to show you a very simple another example here. We use AVE for most of this. So just search for EMA and say EMA cross, right? So Yeah, wonderful. Can you see this place here? Can you see this cross here? Right here. If you are taking a buy from that region, what do you get? About 84% profit. Until you see another one that will move down before you actually do what? Take a sell. You understand? So this is a very, very simple strategy that you can use to bank some good money in crypto, right? Some simple strategy to bank good money. You understand? So if you add them together, they're actually very useful for you to make money. Now, another one is Bollinger Band. Bollinger Band is another strategy that you use, okay, to buy and sell. And I'm going to show you how it is used. Okay. Now, Bollinger Bands basically what they are used for is they are used to denote volatility. And what does volatility means? Volatility means more like I'll call it speed. Okay, more like speed. You can see this is on the 5th of November. In 3 days, you'll have made 80% of your money. That's crazy volatility. It is fast. You're making profits really, really fast. Okay, unlike let's say when you keep your money in the bank and they're promising you 10% per annum, that means you make 10% in 365 days, while in 2 days you're able to make 80% of your money here. There's volatility here. Your bank does not give you volatility. Okay, so how do you know whether there's going to be volatility in the marketplace? So if you use Bollinger Band, okay, now when you see this market, you can see this place here, you can see something we call a squeeze. You can see it is contracting. The distance between this place up to this place down is not much, but what happened here? This place exploded, flowed out. You understand? You understand? So that's just what when you see this squeeze here, when you see this squeeze here, simple thing you can do is just go and add RSI and see what are the two of them talking about. You can see oversold or oversold here, right? You can see it squeezing. What does it tell you? They are prepping, they are accumulating. People are already buying into this market small small. They are waiting for it to do what? To explode up, for you to make profit. You understand? So that's basically how you can use these two together. Okay, these are you can use them together. So I hope you with this you can easily analyze markets for yourself. You can analyze cryptocurrencies and place good trades. Okay, so now we have different types of trading styles. We have scalping. Okay, scalping is when you want to just trade some and make small gain. Okay, you are not interested in staying too long in the market. You just want to make maybe 1% gain, 2%, 5%. You understand? Now the simple idea is if you're making 1%, 1%, 1%, 1%, by the time you make 101% gains, that's about 30 something percent at the end of the day. Unlike maybe when you are waiting for 30 something that will take days, this one you can easily do it within 30 minutes, 1 hour of just staying in the market. You understand? You can use smaller time frames like I said here. Time frame means all these candles here. You can use maybe like 15 minutes. You want to see what's going to quickly happen. Okay. This thing is accumulating. We are already in what? Oversold. So you can easily look to just sell. You understand? Sell. Make 1%, run away. You understand? Come back again. Like that. You understand? You're just there making small gains. Can you see this one here? Can you see this one here? Way overweight, overbought. Just quickly take small profit, leave the market, come back again. You understand? So that's what scalping is. Okay, what scalping is. And we have day trading. Okay, in day trading, basically you have 24 hours to trade. You don't want your trade to stay more than 24 hours. Okay, if you are going to buy a coin, you are buying it within 24 hours. You are taking your profit and you are leaving. You understand? You just take maybe like maybe 10%, maybe 5%, whatever you're able to get that day, you are good, you are leaving the market. You understand? While we have swing trading now, basically swing trading is where you just buy and you just, maybe you have a business that you have another business, you have another job that you are working, and you don't have time to stay here all day. Okay, swing trading is for you. You just analyze it, place it, and go and do your job. It can take 2 days, 3 days, it can even take 1 week. Okay, and in that you can be expecting like 80%, 100% of your money. You understand? So that's just the simple thing about swing trading. Okay, so let's go ahead and analyze a coin, right? Let's just pick a random coin here. Let's say algo. Let's pick algo. So let's go to maybe like let's go to 4 hour. I like that region than other what's it called? Okay, you can see here we have what oversold, and the market is dropping. Okay, market is dropping. Now let me give you a very simple clue. Now this middle line in Bollinger Bands sometimes can actually act as a signal provider for you. Okay, can act as a signal provider for you. Now if you look at this market here, it has crossed above the line and it has come back to touch it. Okay, and I can expect this market to go up. You understand? So I'll be looking to buy algo because of this. Even though RSI is not agreeing with it, but I'm looking at this is quite profitable. We might see it move. It may just be a simple scalp to this place. Let me look at how many percent I'm looking at. Okay, I can buy average just to this. This is like 8% profit. You understand? Quick get in and get out. You understand? Quick money. We move on. Okay. Or let's look for another coin. Let's see. Let's see. What's that? Let's see. Yeah, you can see here totally what oversold below this one. So what you can sell ANKR. Okay, looks good to be sold. Look at this one also. Look at this one also. Same thing with almost all of them like that. Okay, they are already overbought. So to be a bit safe, we can just wait for price to come down for this RSI to touch this place before actually taking a buy. Okay, let's look. Maybe we can see one that will give us opportunity to actually buy. Okay, I know what I'll do. Sorry, cheat code. Let look for this one that just fell. Add USDT. Let's look at this one here. Oh, all of them are already overbought and they started going down. Okay, then still the same thing. Trying to look for one that will actually give us opportunity to buy. Okay, I'm trying to find one. Hopefully we'll find one. Hopefully we'll find one. Hopefully we'll find one. Hopefully we'll find one. All of them are already overbought. Let's see. Can't find. No nice. Let's see. Okay, so this is one of your job as a trader. You have to look at different ones, okay, to find which one will actually give you what you're looking for. Okay, which one actually give you what you're looking for, right? So this baby bananas here. Dodge. Come on, come on, come on. Okay, I can't really see one that is actually giving me opportunity right now, but you can just see here when we got to this region. Can you see this movement up? You see, when we got here, what happened? It dropped. So you can see it actually works very well. Okay, so I hope you take advantage of this. And now let's you can sign up with you can come in. Let me sorry. Okay, so if you actually register with my link, you register with my link. I'll put it in the description. You get and you trade your first crypto this week. You're going to get $5 in as a bonus. Okay, you're going to get $5 as a bonus, and I'm going to give you uh $5 as a bonus. Okay, for actually trading on Binance for the week. Okay, just take this currency this knowledge that you've gained from this um, class and put it to good use. Okay, the simple way for you to get the $5 is simply to open a Binance account. You can download the Binance app on the Play Store, sign up an account. You can verify with your BVN. It's very very simple and it's safe. Okay, you can buy cryptocurrency with Naira. Just how do you do that? Let me show you. Very simple way of doing that. You come on Binance. Just click on buy crypto, pay with NGN. Okay, you can just do bank deposits. Okay, you can do credit card. Okay, whichever one you want to do. Okay, understand? So you can easily buy Bitcoin and whatever with your Naira now. It's as simple as ABC. Okay, and you can start trading and you can get your reward. And also, if you're interested in this, okay, you can become a Binance tutor. If you already know how to trade cryptocurrencies and you want to teach people, you can um, you can do that. You can sign up and teach people. You can just check on Binance Africa on Twitter, and the you see the whole process on how to get started on that. Okay, and you can follow Binance on Facebook. You can join us on Telegram. Okay, Binance, just t.me/ Binance Nigeria. You can just search for Binance Nigeria. You see our group there, and you can join our community and learn more about cryptocurrencies all in all. Okay, so I want to take our time and go to Twitter and give me a review on what you learned about the class. You can tag me at James Gold and use the hashtag my Binance class. I really appreciate that, and follow Binance Africa. Okay, so I hope you learned a lot in this class and you hopefully make use of this and make money for yourself. Okay, so yeah, um, good luck and good trading.